Hey guys, welcome back to Assisted Living Investing, part 4 now of the calculator. I'm Brandon Gustafson, happy to have you on the channel today as we continue our tutorial of my calculator and kind of going through and trying to give you kind of a line item view of exactly how you can use the calculator. Whether or not you're using my calculator, I hope this is valuable to you so that you know how to underwrite deals and just kind of gain a better, more solid understanding of what it is to underwrite a deal and how it works and just the process that you go through and how involved it can be and what you can learn from it. I am by no means any expert, so please make sure that you are looking at things on your own and kind of doing your own work. But I do hope that these resources are valuable to you. And you might be hearing some thunder there in the background. It's a rainy day here in Salt Lake City, but it's a good day. I love the rain, so it's awesome. But we're going to jump into the calculator. Make sure that you like the video, ring that bell, and so you can get notified as I continue putting out more content, getting out 2 videos a week now. And make sure you subscribe to me or I guess follow me on TikTok so that you can get those daily just kind of quick hits on different tips and tricks and things that I'm putting out there, and join the conversation on the other social media platforms. Make sure you subscribe and then comment down below if these videos are helpful. I'd love to hear from you and see what I can do to further help you on your journey to get into assisted living investing. I'd love to hear from you. So we're going to jump now into the tutorial. This is where we were at last time. We were on the tab that is looking at the calculator, the projected financials calculator. So we went really in depth in that. So make sure you watch that video so you get a good solid understanding of the brains behind this calculator and how it works. Today we're going to jump into the yearly pro forma. So this one might look a little bit daunting, and there's just a lot of colors and things in here. Really, you're not doing much at all in this one. Probably just validating the data, going through, making sure that everything does work, and all of the work, everything that you're entering on these previous tabs, the expenses and the projected financials tabs, are going to feed this yearly pro forma tab. So this is really just a tab for you to look at and get information to help you better understand exactly what you're doing with things. So right here, this is just your anticipated monthly rental income. And what I've got here broken out is I've got annually years 1 through 5, and then we break this out and we go to year 10, year 20, and then year 25 is how it's built. And these are, there's another row up here that's hidden, but they help do some factoring down here below, and they just have the numbers on it. So not much to see there. I'm not going to unhide it for you, but as you're using the calculator, you can go ahead and do that and make any changes. If you wanted to change this to a year 30, you could change the corresponding number up there, and that will adjust the rest of the numbers down there. I'm not going to go through and show you exactly where everything is pulling from. If you click on a cell here, you can go in and you can look at it and say, oh, this is going projected financials, cell B32. So I would come back over here to the projected financials. I would go column B, and then I would come down here to cell 32. So it's pulling that number right there, 126,381.25. 126,381.25. So that's good. And then these ones are actually pulling from the factors that are up there and just in different spots of the sheet. So you can always just kind of follow along with what they are. This is your income. These kind of more red tinted ones are going to be different expenses. And I have them broken out by kind of different numbers because it just kind of gives you a really good view of everything that's going on there. It's taking into account the vacancy allowance that you're going to put in, that contingency budget that we looked at here on the projected financials, this $300 vacancy per bed. It's kind of pulling from that. But those are your expenses. And then up here, we're going to get into, this is your monthly projected NOI. So we talked about NOI in a previous video, that net operating income. But you're going to notice here that this NOI number is after expenses, but not including the mortgage. So it's taking out that debt service payment. Okay. This is going to be your monthly cash flow after expenses, the mortgage, and the vacancy allowance. So this line right here is taking into account this vacancy allowance and your debt service, which your debt service is, I know it's on here, but I'm just kind of missing. It's right here. So line number 7. So it's pulling in that. So this is this is kind of your, I don't know, your normalized, your true NOI after all of those expenses, what that projection is going to look like. And then this is going to be your yearly cash flow after all of those expenses. So these are monthly numbers. This is annual number. It's just taking that number right there, multiplying it by 12. Okay. And then these project out into future years as well. From here, you're going to put in this is pulling the purchase price. These are looking at that asset, that home value. So this is that cell that we were talking about right here, the initial home value. It's looking at that and how it might appreciate over time and what it's going to look like. So, over a 5-year period, it went from 6.8 million, and now it's up to almost $8 million over 4 years. So just kind of a way to project what that real estate value might look like. Take it all with a grain of salt. Those are all complete projections, but you want to kind of do your research and see what it looks like, so you can look at that and figure out how it works. This is, again, just kind of your anticipated monthly loan payment, and it's just pulling from up here. But that's based off of the mortgage right here, this mortgage calculation, and then it also pulls in from back here on that mortgage. This is your invested capital, so this is the money that you're putting into the deal. Again, this is that GP, shareholder equity, or joint venture, however you want to look at it, but it's kind of built off of that projected financials calculator tab. Same here with the limited partner shareholder equity, and those rates right there are going to help inform some of the returns that come down here. Now these ones right here are different ratios. I name what they are here. If higher is better or negative is better, so you can kind of get a feel for exactly what those are, and kind of gives you a little bit there. These also will tell you if it's good or bad or just kind of okay. And these are actually what is called conditionally formatted. So green means good. If the numbers and ratios fall into a spot where it's yellow, then that means it's okay based off of this. And if it's red, that means it's bad. You can set these up and you can get in there and adjust them, especially if you're familiar with Excel and Google Sheets and how to go and adjust conditional formatting. You're welcome to do that in your version, but this kind of just gives you an overview of what those look like. I'm not going to dive into each of these ratios in this video, but if you'd like me to get into different ratios and how they work and things in another video, make sure you comment down below so I can do a video around that, around what net profit margin is, what cash on cash return is, what return on assets are, return on investment, and I can really kind of dive into each of those things. We went over cap rates in a previous video, so here's what projected cap rate is going to look like on that there as well. So getting down into here, these are breakdowns of cash flows for the general partners and the limited partners, again, based off of these right here, the equity percentages that each has, what those projected cash flows are to each of those groups and how they work and things like that. And then the cumulative yearly cash flow. So you can kind of get a feel for what that's looking like. And then right here is property value. So this is where you are kind of getting into the spot where some of this information is a little more helpful for you as far as tax purposes and what you might look at and how much equity you're going to have in the house, how much you're paying in interest versus what you're paying in principal to your loan, and how much you're able to depreciate on the property and things like that. So very helpful there. Not something that you're going to share necessarily with your accountant, but these are projections and let you kind of better understand. If you're able to depreciate $197,000 just in the real estate, and you're able to depreciate $185,000 in the interest paid, like you're writing off $300,000-400,000 grand a year with just those things there, and those carry forward. This is where investing in real estate is just awesome. You're able to carry some of those things forward to you. Make sure you're talking to your accountant to make sure that you understand exactly how those work and how they impact you. But it just gives you a good idea, and it helps you better understand exactly how that's going to work. This one's telling you how much you have left on your mortgage payment there as well. That's the reason why this goes to 25 years is because that's how long of a term you're going to typically see, especially if you're doing an SBA loan, is a 25-year period. Let's see down here, we're going to get into cumulative appreciation. the cumulative GP net cash flow per partner, so how much they're making on an annual basis. So this is really helpful if you're having limited partners and general partners to see what that cumulative cash flow is per partner on an annual basis. And then this is just going to show you the net profit if you sold it. So we've got into some of those things here in the projected financials. They're just numbers that you want to have in there because it's going to give you an idea of what things might look like after you sell. Like if you sold it after 1 year, you're taking a loss, but after that, you're making money. So it kind of gives you an idea of that. And that's a lot of what this is here as well. So what's your net after sold, your cumulative total cash flow. So this is all of the money that you're making there. Your invested capital amount here, so you can see it, and then what your net present value is, and then the LP ROI after a sell. So in this case, you would probably want to wait till after year 3 to sell it, so you can get a full return to your limited partners if you were doing a syndication on this. So jump over here to the limited partner breakdown. This is where you would just put in here, invested amount, 1.5 million. The invested total, the total investment amount. So this is looking at, we said that we wanted to go in and we wanted to, the limited partners are putting in 1.5 million. This right here is actually taking the sum of all of these for your different investors. You can put names in here. But right here, you can see we've got funding just over $1 million. We are 70% of the way there. So we've got to raise another, 500 grand on this. And so once I put in, I think this is going to put us over the top of it. Yeah, it puts us at 103%. But you can kind of see exactly how that works. And then you can see here, this investment rate puts somebody and says, okay, so on the return, our limited partners make $300,000 over the course of a year. And of that $300,000, 33% of that is going to go to this investor, and 6% of that 300,000 is going to go to this investor. So that's kind of how limited partnership breakdown at a super high level. Those that have worked on syndications before or anything, I'm sure you could. I'm sure you're just like pulling your hair out and things, but just at a really super high level, this is kind of how it works, and gives you a little bit of an overview of exactly what that looks like. And then this is just a note around how you might set this up. Assisted living, in my experience, is you're able to, so a typical syndication, you're probably looking at like a 70-30 split. You might even be able to adjust that a little bit higher on the GP side. With assisted living, you might be able to get it, 80-20 or something like that. What you're really hoping to do as a GP with assisted living is just give your investors a return, whatever that return is. It could be you're trying to get them a 15% return, and then you're just adjusting your ratio, that 80-20 split, 70-30 split, to match that return that your investors want. And then the rest of that you can kind of bank on the GP side. Watch videos on syndications would be my advice to you there, to get a better understanding. Wages. So this actually is a tab that is populating the wages expense line here in the expenses tab. But you're going to put in here, like this is your administrator, what they're making. And then this is hourly rates for your other caregivers and how many FTE those caregivers are, if they're a full FTE, if they're part-time, whatever that looks like. This is giving you the monthly salary rate. And this is a workers' comp projection based off of some research that I did. I feel like it's not 100% correct, but it gets you in the ballpark of what workers' comp might end up costing you. And that one also feeds into the expenses tab here on workers' comp insurance. So everything is kind of just pulling through there on this wages tab. Rent roll, we talked about this in a previous video, but this is where you're getting room, possibly a name, what that rate is, if it's occupied or not, and then maybe you put something in there that's private versus Medicaid, and then you're able to kind of run a little bit of analysis on that, and that's going to feed a few things back here. I can't remember exactly where it goes, but it's feeding information in there. It's also just really good for you to see what the average bed rate is, what the potential might be as well, if you were to fully occupy things. And then this is, again, just a mortgage calculator based off of that. It's giving us property value and appreciation values as well by year, which is pulling into the yearly Proforma tab, and we've got something very similar here on the hard money tab. So yeah, that is the calculator. As you can tell, there's a lot of work that went into it. When I started this, I had no idea what I was doing. I found a resource online, a great multifamily calculator, and have kind of shifted that over here to assisted living. So it has a lot of feel of a multifamily investment calculator, shifted to assisted living. But it's something like I love working in Excel and working with these types of tools. So it's not something that scares me. So I would love to help you out. If you have questions about Excel, questions about different rates and ratios and how they work and how to kind of build those things in, I'd love to hear about it. So I can kind of give you the insight that you need to be successful and successfully underwrite a facility. Make sure you comment down below if you have questions, if you have comments, if you find things that you can improve on as you download the calculator and start looking at it and playing around with it. Let me know. I want to make sure this is a good resource for people, that cells and formulas are not broken, that it works well for people. You can get in and you can use it, and it's a seamless process. But I'd love to hear from you. Make sure you like the video so other people can find this, other investors. Make sure you ring the bell so you get notified every time I put new content out. Make sure you're following me on TikTok so you can get those daily quick videos on information and learning a little bit more about assisted living investing and how you can get involved. Make sure you're joining the conversation on Facebook and follow me on Twitter and Instagram to get more information. Just kind of join the conversation. I really want this to be a group that you're able to lean on each other and create opportunities where you're working together. I'm so happy you've been able to join me today, going through this very lengthy process of going through the tutorial of the calculator. I really hope it's been valuable. Make sure you like the video so other people can find it. Yeah, like, comment, subscribe. I'm happy to have you here with Assisted Living Investing, and hope to see you next time. Thanks for joining, and have a great one. See ya.